All right, good morning. And so the question this morning about what's happening here over the last week is this building a bottoming process. Got the futures here. You can see so far today kind of dipped under yesterday's low and just kind of hanging out there. Just continues to be in a trading range, so it came down to the bottom of the range and buyers stepped up there. And so the question is it part of the bottoming process or is it building a new ledge to go lower? And so, depending on where we look, you can come to different conclusions. But look, this is down a whole lot. As you can see, as I measured here, it's about 17% down. And it violated support. And so, we would typically look, not typically, we would always look that ultimately it would come down to this level here, where there's got this large area of overlapping bars from last year. Now it is down a whole bunch from the top of the move down to here. We've got this stabilization. So after a certain amount of time of stabilizing, buyers begin to lose confidence. Now I'm not sure that they've lost enough confidence yet. Today could be a green day by the end of the day, and we do get the bounce up, which ultimately then might lead to the move down here. So short-term extended internals being where they are. And as you can see from what we looked at the beginning of the week, they've become a bit more extreme. Now, if you go back and watch the pre-market videos over the last year or so, not in every one, but in many of them, I said, hey, they're at the top band here, or it's at the lower band. And I would point out that historically, extremes would come down to 1.2, but it's been a very long time since we've seen sentiment down at 1.2. So if today move down lower, maybe that'll get tagged. And I mentioned to Dan this morning, it's probably been at least 10 years or so since we've seen real bear market extremes, which would come down to around 1.4. It's been a real long time because we haven't had a bear market for quite a long time. So being under these lower bands, which, you can see are starting to inch down, and they'll adjust for a more bearish market environment where the lower bands and the upper bands will move at lower levels. And then 1.8 is historically the static level, but in a bear market, it won't get to 1.8. So we'll see where today ends up, but ultimately I'm thinking maybe this 1.2 has to be tagged where there's so much put buying. Now, it doesn't necessarily mean that the markets have to go down to get to 1.2. It only requires a belief that they're going to go down to get enough put buying to get this push down to this level. And that could just be a break at these levels here that eventually springs back up, because this has been a support point all week long. We're still above Monday's low, I should say. And things are just jiggling back and forth, and why I'm showing this trading range on the 15-minute chart that's going on here. And of course, it'll be the same thing on the hourly. It's just been whipping back and forth. So as we look around and we see the Nasdaq Futures here, same story. And we've all week long, that's what we've been seeing, back and forth, as this flips, within this trading range. And when this big bar turned into a topping tail, of course, buyers were like, what the hell happened? You're taking out the high of a red bar closing at the low. Buyers are supposed to continue, and the intraday chart is supposed to go sideways and then launch the next move higher, and that didn't happen. So now everybody's sitting back and waiting to see who's going to step up here and push this back up. What about a test of the low? Well, we're getting a test of the low, and it's not out of the realm of possibilities, and has been one of our potential scenarios, which I spoke about yesterday. It didn't go down there, but I was thinking it would be great if prices would drop, take out Monday's low, and then reverse back up again. That would be the type of a pattern that would give us confidence because, excuse me, stops would get taken out. Monday's low was a significant point. And so it would be some, a type of a shakeout, and the psychology, the mechanics behind that is that those that bought down there, or let's just say in this area, were kind of sitting there like, damn, don't let this thing go down and hit my stop. And, and then so those that are going to follow their plan, the stops are going to get hit. There's going to be a little flush. And then we see if it just resumes back up again based on where our internals are at and things short-term extended here. So we're waiting. We've been waiting all week. We're continuing to wait. The Russell just has nothing to stop it from going down. And so what'll save the day here? Well, if the other markets move up, institutions and traders that will probably want to continue to sell this will back off from that, and this will have a little relief push up. Let's see if we can get a green day here, which then what I would say on Monday is look how the momentum is slowing, where the momentum picked up here. And then if we get some kind of a reversal day, look at the distance between the lows, momentum is slowing. We get some kind of retracement back up. But this probably won't be the best place to play a counter trend move. Rather, it should be this, which is down much more. So Techland, what's down, and of course, what are the favorites that institutions will go after, and so on. Now, if we always have a couple of scenarios, especially in a situation where we just don't have an event yet to say this is it. Like Monday was, and it's like let it go sideways a bit, and then we go up. But should this break these lows here, well, we just look to the left to that level. Because look, it'll only go down so much before institutions think that things are cheap enough. And so whether that's a 20% level, being down here around 13,000, 200 or so, 20%, that's where it is from that high. Dow is flip-flopping, just a picture of stay the hell away, right? Just indecision, uncertainty. You got tails on the bottom, you got tails on the top. And if we put this on a closing basis, if I can do that quickly here, just to kind of show you, candle, put on a line chart, and we just see that things are just, flip-flopping back and forth. Little trading range, did make a lower high, and we'll see if this makes a higher low, and just ultimately going nowhere. It's just a different picture of the same thing we're talking about. Bitcoin going nowhere all week. Over the last couple of weeks, we're like, okay, down here, 30,000 measured move. Not there yet. SPX, what do we do with SPX? Well, the upside would seem like a no-brainer. Let me just look at the premiums here. SPX. Uh, 46. I got so many downside strikes in my minder here. I got to scroll it back. Well, 475. That's interesting. It's so skewed to the downside that the premium on the upside is like non-existent. 44.75. Yeah, but look how close it is. Who the hell wants to do that? If we got a turnaround day today, So we want to look way down low to see what would be perceived as crash levels. Wow. 41, 40, 41, 45. It ain't going down there today. You know, and as always, like, what is our line of defense? Well, 4,200 is a big number. We got a shelf of support here. Um, it's under this pivot low right here, that premium. And so we've got Monday's low. And then from there, so what I would be thinking is looking at the hourly chart and where SPX is, breaking down below 4,200 thereabouts, or it's a greater than 100% retracement. So our normal thought process would be to look for a bounce. Now, if this should break here and it's got to start heading down, it's not just a fluid move, 100% retracement. Breaking below here, that it's gone sideways like this, should fuel the move to the downside. So the thing we want to do is see if 4,300 breaks today, and it's a balancing act of time decay versus price movement. So just jiggling around here, the premiums will start to deteriorate down there. But if it breaks this low and starts to accelerate, they're going to pop big time. And then should it start heading down there, these premiums down below here, it depends on how fast it goes, would expand, and you're far enough away where, I don't see any reason why things would just collapse today in such a dramatic way. So down below 4,200, and we're talking 4160ish. And so I think it's highly unlikely it's going down there. And that's all the credit spread is. I don't think it's going to go down there today, and it expires today. And the odds of calling today are much greater than calling the odds 2 weeks from now. So yeah, down below here should be very safe. Let's see what happens first thing in the morning, where we're at here. But things are still just jiggling around here. So maybe it never even gets close. And so like 4,200 is $2 by 220. We never go for the big money type of situation there because that's just too close. But yeah, they're kind of betting on a real nasty move to the downside. Yeah. All right. So Bitcoin, we covered, just going nowhere, which looks more like building the shelf to the downside. And if Bitcoin's going down, kind of leads to, because the markets have been moving with that the market goes down. Oil is still up there. I think $90 becomes a magnet. Silver disappointed again. Gold disappointed again. It's down here at this pivot low, and it tried to bounce a little while ago, and it's not doing such a good job, but it's in an area where it should begin to stabilize. And the euro is stabilizing a bit here. So maybe a reason why the markets are holding at this time. It's a lot of damage done everywhere. Transports look like they need to come lower. So if we get some kind of stabilization today, I look for, as many markets as possible to be lined up for the greatest possibility of a turn. So if the transports should find their way down to 14,000 over the next, into next week, and the just looking at the Qs here, coming down to this 320 area, I think that would be where things begin to really take hold. And look, we don't have any inverted yield curves. I don't know if I have any charts here. This here, the distance between, well, the between, I have to see what these are at here, but I think it's between the 5 and the 10 and the 30. They're getting uncomfortably close to the zero line. Whereas the difference between the 3-month and the 30-year are so far away from what would be an indication of a recession and bear market territory, getting toward that. So kind of a mixed picture there, but just historically going with the most extreme, we're nowhere near a concern of a recession and a bear market. Right? Do you think possible bear market trap on Monday, or Ukraine thing spikes fear? There's always something to people are going to be fearful of in a situation like this. All right, so 5-minute chart. Yeah, I scrolled this over here. Here's your 5-minute chart. So there's was a little bounce there and just now. Q futures bounced up, S&Ps bounced up, and whether that lines up with what time is that? 8:30. So there was some news, yes, and the euro and it bounced up. So some news at 8:30 got things popping to the upside a little bit, which, if that holds, that's a level to see, does it actually hold? Now that you had that spurt of buying, this pre-market low here is going to become significant as a reference point, because once you see a move like this, what it's supposed to do is it reaches resistance, is what it is doing at the moment. Go sideways, buyers on the dip, bottoming tail bar. Now there's still plenty of stuff to the left there, but it's a decent start to a move off of the low and going back to SPX and those levels way down there. As long as it stays up here, those levels down there are never going to be touched. So still hanging up there. Interest rates all going up. But see, the problem is, if you will, is that the 10-year is sideways. It's slow, which this going up, should it continue, it's so far away to catching up. But, the 5-year and the 3-month are going up a lot faster, where the 10-year is not doing anything and the 30-year is not doing anything. So eventually they get closer and closer. Anything, who's doing all the selling and profit taking? Institutions. It takes them a long time to get in, and it takes them a long time to get out. If they all sold in unison, markets would be all the way down to much more significant support levels, or breaking them. All yours, Dan.
Good morning. Happy Zero DTE Day. Yeah, I was getting, nervous here this morning on the crash scenario playing out. Not crash, but crash to new lows, and then looking for a turn maybe. But we have a couple short puts and spreads that I'll be keeping an eye on of rolling today. So Friday roll day, or hopefully most of them expire worthless. I'm rooting for this bounce here. Like, we have a 430 spider put spread that was underwater pre-market, but now we got $2 a cushion, and it's the melting ice cube. We just need this thing to go sideways or up for 6.5 hours. We actually did a Tesla put spread yesterday into weakness on purpose. And I had an email from somebody last night or this morning saying, I don't understand this. There's, why do you do that? And so I explained the whole thing. Jim, the answer is, let's approach it as a new trade. Oh, here, I have a whole list of things here I forgot to post. Hold on one second. I think we might find better ones, but that Tesla is always on the usual suspect list. Hold on here, I have a. Oh, shoot, what happened to my list? Shoot, I had a whole list that I deleted by accident. Oh, no. I had a whole, shoot, sorry, shit. All right, we'll have to rebuild it. All right, they're in here. So let's just rebuild it. No, it was a Word document that I pre-market, I build in earnings season. And I just think we have better candidates. Apple, I like better. Team here, I posted. Look, Team's a gap from this bottoming pattern. It's gapping not over yesterday's high, but well, yeah, it is actually. It's a 30-minute high. I like that. But yeah, let's go through the list here. We got to rebuild it, unfortunately. Darn it. I hit copy V instead of copy C, I guess. I don't know. All right, VNet 870 bottoming pattern. You had an upside shakeout, downside shakeout. So it's still in a trading range. Nothing to do today, but we'll keep an eye on it. Well, we're already in Home Depot. DDS, we posted this a couple days ago on Wednesday, and it's still valid if it takes out these highs. 284, 274. Lee, Home Depot, we're already in, but we're short the 310s. I don't know why this thing had so much juice so far away, but we did a naked put on today's Friday. We did it on Tuesday. So that's, does anybody, it's gapping down here to 352. Does anybody think this is going to sell off $42 in 6.5 hours? I don't. Indo, that I don't know what was up with that yesterday, but that could set up for a day trade. IMPP $2. That's I don't know. We'll come back to it. Now this one, $48. It's down a lot. 68 down to 48. That is quite. I made a comment to Greg today. I said hood. I said poor hood, and Greg's comment was poor many things. We've been saying that for weeks now about the nasty breadth all over the place and nasty trends all over the place. Look at Piton. Look at Zoom. Look at that trend. Look at T-Doc. I mean, these things are just getting killed. So anyway, so WDC, it's down so much on this gap. So it closed at 53, so it's gapping down another $5, almost another 10%. So let's watch it. Let's see if buyers want to step up. So 30-minute high, that would be a great 0 DTE trade because earnings and a nasty gap, volatility is going to remain high. Natty, it shows it at 41 bucks, but I don't see any prints here. But if it is gapping to 41, that's a nice gap. Clack gapping down, that's a call spread candidate. Juniper was one of my put spread candidates. Down a lot, making the turn. Remember 10 days ago, that was the MT Live. It's making the turn here on this support area. So that's a put spread watch. Blason asking, is Apple a good buy? First of all, you got to tell me what time frame you're trading, but it's a bullish gap. It's over a red bar, has a price void. So for a swing trade and day trade, I'd say, yeah, put it on a 5-minute window and let's see how it sets up. So this to me as long as the market holds 5, 10, 15-minute high, this is a fantastic, not only 0 DTE, but 7 DTE put spread. Somebody's asking about CVX 20 delta short put. I'm sure. I mean, 20 delta is far away. It's a bearish gap, but it's still 50% gap down, midpoint. I'd say 5-minute high, depending on how much juice you can get. Striker gapping down to 240. Here's a call spread candidate. I'm going to put that in another window. That's my K. RMD. I see a couple flatline down here at 215, but you know, that's down a lot. 265 to 215. Blue asking about SARC. SARC is the inverse, you know, the inverse arc. I don't know what time frame you're trading, but too extended for me for a long swing. But you know, day trade, it's gapping up and reversing on support. So maybe 5, 10, 15-minute high, but you know, you would prefer market weakness to be on your side because that's an inverse thing. Poor Oscar here. Look at that nasty trend. Had earnings, does have a gap up, but I got zero interest in that. That's one of these healthcare providers on Obama Exchange. WRB, I don't see the gap. Affirm. It wasn't earnings, but it was some kind of news. This is a very bullish pre-market. Gapping up here to resistance and going sideways. I'll put that in a window. As a day trade long, maybe 5, 10, 15-minute high, I don't know. Visa, this is a failed sell setup with a bullish gap. Wow, the gap's too big. Gapping way up to the top end of this range, so I have no interest. Always look at the cousins. MasterCard, no pattern. So V, you're gone. I got no interest. X, it's, you know, it's a climo. It's in a downtrend, but it's working on making the turn. So that's what I call just riding the elevator back up. This is a sell setup. Olin, it's filling the gap right now. So that's a short idea, 5, 10, 15-minute low. I don't see this gapping, but it's a breakdown, multiple time frames, but it's light volume there, 95,000. Hain, also light volume, you're going. Charlie Echo, don't like the pattern. RHI. Nice trading range. There's nothing to do there. We'll come back to it. Maybe some type of spread. Also a sell setup, but far from the 20. Beezer opening flat, down a lot on support, no interest. Mondelez, bearish gap. That was a call spread candidate when I had my list before I deleted it. That's a topping pattern. PSY, no pattern, or PSX rather, oil company. Continued breakdown on BA. That would be a call spread candidate over yesterday's high. If there's any juice, look at WDC bottom right. Remember I said, let's see if buyers step up. And they are ripping it up. They like the value at 48, 49 bucks. All right, let's keep an eye on that team put spread idea.